And I do think it's important the Fed just be the responsible adult in the room, keep a steady hand, stay on course, reaffirm the fact that the economy is doing relatively well, still expanding, of course, driven by consumer spending. The manufacturing sector comes and goes. The recent IHS market PMIs were much stronger than people expected, but the other source of PMI measurement was not quite as strong. So I think it's important that the Fed just keep a steady hand here. I don't think this really impacts them directly. Rates have come down, as you just pointed out, in a very sensitive part of the yield curve, which is the 10-year. And all in all, I think what this entire event does is underscore the relative safety and attractiveness of the U.S. economy. I mean, look around the world. If you look at the energy complex, we benefit in the United States from this because we have the Permian Basin. And as was pointed out in some of the earlier interviews that you just had, this encourages people to produce a little bit more here. West Texas is up. Of course, Brent is up. We're still an island of stability in the global economy. If you look around the rest of the world, obviously the Middle East is in tension right now. Latin America's a mess. Australia is on fire. Europe is beset by weak manufacturing sector. I think what this ultimately does is underscore the fact that the U.S. economy and the U.S. markets are the best place to be. And that's a good thing for the central bank.
So Richard, I want to hit on that point with you because I want you to take a listen to something that current sitting Dallas Fed President Robert Kaplan told our own Steve Leisman just late last week. This idea that the U.S. is in a very different situation with regard to its energy profile. This is what Robert Kaplan had to say.
I think you would have gotten a different reaction 10 years ago, certainly 20 years ago, and I think it's indicative of the United States now producing 12 million barrels a day, where we rival Russia and Saudi Arabia in terms of energy production. We're much more energy self-sufficient.
Dallas Fed presidents are always keenly aware of the energy markets, as you are and have been in your past. Does the U.S. economy get threatened at all by any kind of geopolitical tension? Or is it just this island of safety, like you said?
Well, we always have to be on guard. We always have to be alert. We could be attacked again. But the fact is that we, relative to everybody else, remember, money is always relative. It goes to the most attractive spot. Relative to the rest of the world, we're in the prime position here in the United States, separated by oceans, having the Permian Basin, having an entrepreneurial culture, consumer-driven, full employment, still positive economic growth. I agree with my friend Rob. He's a great successor to me, by the way. And as you know, the Dallas Fed always has unique and the most important insights of anybody in the Federal Reserve System. I'm kidding. But still, I do think it's a good point that he made. That whole energy complex has changed. And relatively speaking, we are energy independent. That makes us a unique place in the world.
Take us behind the boardroom doors at the Fed right now, Richard. What are the things that Jay Powell and the team at the Fed going to be talking about the most in the coming months, given the recent slate of events that have unfolded in the past few weeks?
Well, again, they've been working on trying to come up with a new framework of expression, provide the right forward guidance. They've paused here, which I think is very important. It gives them time to breathe, and they have a period here where they've signaled they're unlikely to do anything significant for the foreseeable future. Allows them to go back and examine themselves internally. How are we communicating? What kind of forward guidance should we give? How is the economy doing? What are we missing here? How do we really talk the market into finding us less dependent on us and more dependent on the fundamentals of the economy? So I think we've got a nice period of calm here from the central bank. I think they're probably enjoying this period. They have a meeting coming up fairly soon, and that'll be the new voting structure for the committee. But I do think overall Jay Powell has managed to pull everybody together here, made it clear it's time to be calm, it's time to just think and reflect and figure out how we're going to express ourselves going forward without becoming too disruptive, and certainly never disruptive to the real economy, even though the markets may become volatile depending on their dependency on what we say and what we do.